All right, on to the Mid-Cap Masala show. What we are getting to see in the markets is quite a tepid session coming in for the broader end of the market as well. Yes, of course, the benchmark indices have been under pressure. Nifty trading below that 25,300 mark for itself, though there was a recovery attempt from the day's lowest point, and we are off the day's lowest point as well. But when it comes to Nifty Bank, the pressure continues. More than 400 points of cut is what we are getting to see. Sectorally, what's interesting to see is that the pharma pack is doing very well. It is the top sectoral gainer, almost a 2.5% gain is what we are getting to see. And a lot of these, the broader end participants within the pharma pack, be it the small cap or as well as the mid-cap pharma companies, they are doing very well. Add to that is the Nifty Healthcare Index. That is the top sectoral index as well in terms of the gainers. Other than that, it's the power sector that is also doing very well in trade today. Add to that is the Capex Index. So that's the health of the market right now. But let's move on and let's connect with the management. And joining us on the show is Mr. Anil Rai Gupta, Chairman and Managing Director of Havells India Limited. And Mr. Gupta, hi, morning. Good to be speaking with you. And firstly, with respect to your numbers then, when we see your EBITDA and margins specifically, they seem to be declining on a year-on-year basis. Can you tell us what is the main reason behind this and what is the outlook for FY27?
I think if we divide the results into two parts, which is Havells standalone and Lloyd. Havells, we have seen an improvement in the EBITDA margins, the operating performance, and Lloyd, there was a decline in terms of revenues and profitability. And that is also related to the fact that there was inventory in the channel due to a very bad season during the last year, and hence and a delayed onset of summer in the fourth quarter. So the revenues of Lloyd for air conditioners went down, and hence the resultant decline in EBITDA. But overall, Havells standalone performance has been quite good, despite the fact that there were reduction in sales in seasonal products like fans and coolers. Other businesses of Havells has done very well.
Okay. And Mr. Gupta, if you could help us with what is the volume and revenue growth guidance for FY27? Any numbers if you could share?
I think right now we are still in the very start of the year, and we usually do not give any guidance. However, we do expect that there is a low base for the seasonal products, which will reflect higher volume growth in the seasonal products in this year. But there is an overhang of the war situation, which may affect the demand, but it is difficult to say at the start of the year. So we are still looking at, how this year pans out.
All right, but Mr. Gupta, let's talk about some of the factors that could be playing at this point in time, and wanted to understand how are you anticipating the cooling segment to perform going ahead in FY27, because of late, yes, of course, the extended monsoon has something that has impacted you for the past few years, and this time around there is a risk of El Nino. Add to that, there's lots been happening geopolitically. So what's the outlook for the cooling segment going ahead?
On the positive side, yes, we are entering the year with a low base of last year. And the summer season, though it started late in April, but it has started, and it should reflect good volume growth for our seasonal products like fans and air conditioners. I think you're right. The geopolitical situation does pose some challenges, especially on the raw material prices front, which does mean that we have to pass on the costs to the consumer. And that can, be a little bit of a dampener in terms of volume growth. So, we have to balance these two things and see how things pan out in the coming quarter.
Okay. Mr. Gupta, let's talk about how situation is playing out on ground. Now, there are some reports which suggest that retailers at the moment are facing AC shortage due to a reduction in supply from manufacturers. Has there been any stalling or any delay that you're seeing in production, any shortage over there, given the impact that we're seeing on the war front because of raw materials, LPG, gas supply? Any impact on your production, which is then leading to a shortage towards retailers?
I think this is, partly true because right now the situation is more in the southern markets of India because of the situation where suddenly the onset of summer has happened. There were two things. One, there was some production delays in the month of March, as well as the retailers also had stocks and they had delayed their purchases from the manufacturers. So all these things put together have resulted in a very temporary situation of stockouts, but I don't think this is something to worry about.
All right, along with that, can you tell us how much price hike have you taken across your portfolio and especially for the Lloyd brand? And along with that, how is the channel inventory right now for fans and AC segment?
I think overall for all seasonal products, other than seasonal, non-seasonal products also are facing inflationary challenges. ACs and fans have seen a double impact because of the energy rating changes on the 1st of January, which meant higher costs for production. After that, there were, geopolitical changes, which also resulted in more cost increases. So between January and now, there have been constant, pass-ons to the market for cost increases, and it's more in case of fans and air conditioners, but also in other product categories as well.
Okay, and going ahead, Mr. Gupta, if you could help us understand what is the planned capex for FY27 and for the next 2-3 years also across your segment line.
I think last couple of years we have been investing heavily on capex in cables and wires business, also Lloyd. The Lloyd new refrigerator facility has come up or already started production. So in the next couple of years, we don't see major capex in the Lloyd segment, but there will be continued capex in the coming years for cables and wires. And this year we should be looking at about a 1,400 crore capex in FY27.
All right, but going forward, what is the growth for the solar segment that you are expecting?
Yeah, I think, new segments like solar have contributed to good growth in the coming time. Last year, we had invested in Goldie Solar, which meant almost like setting up a factory for solar panels. So it puts us in a strong supply chain situation for solar products. So going forward, I think in the next few years, yes, this will be a good growth driver for Havells.
Okay, and lastly, Mr. Gupta, I know I asked you this earlier, but because of the West Asia conflict, what are the disruptions that you're seeing in your business? What is the export exposure that you have to the Middle East? Any slowdown over there?
Well, I think overall, our Middle East contributes to about 40% of the overall exports, but our exports are limited to about 5 to 6% of the overall revenues. Having said that, there are other disruptions, including, as I already mentioned, an increase in raw material prices, some constrained supplies of gas and raw materials. So I think this is a challenging time through which we are navigating and hopefully come out stronger.
Indeed, and wishing you all the very best for that. But with this, Mr. Gupta, we let you go. So good having you on the channel today. Thank you so much for your time. So that was the management of Havells